The dollar has staged a massive rebound, breaking out of bearish structure. Is this a fake out or are we going to continue to the upside? Let's break down all of the key fundamental talking points. Hey, baby, happy Sunday. I hope we're all well and truly lit. Yes, we're back. We're back with another week in these beautiful markets. And you see that energy? That's the dollar bulls right now. They're pumped. You know, we've had the best weekly performance there for the dollar index in a long time, ending this sharp, extremely sharp decline. It was sharp, right? Heavy and overdone. Overdone. Look, I said it was a matter of time before those bulls come back with a vengeance. And there's an accumulation reason. It's not just, everyone's like, oh, strong NFP. That's why dollar rallied. No, the dollar had already staged a rebound at the start of the week. It's laying the foundations. Okay, it's laying the foundations. And the reason, and this is what I always say, to look at the markets from a broader view, and it's very easy to do so. I'm not asking you to be a fucking economist. I'm asking you to be aware of all the key talking points. And then you formulate a view, you put all the pieces of the puzzle together and formulate a view to tie in with your technicals. Okay. Whether, it's always important to, you know how things are structurally on a technical level, right? Where there's a structure there, whether we're printing lower highs, lower lows, or vice versa. We have the same thing on a fundamental level. We have these accumulation of fundamentals, these macros that put the piece of the puzzle to create a theme. Okay. And that theme will be either to the downside or to the upside. And from the get-go of this week, right at the commence of this week, we had geopolitical tensions, right? We're going to talk about the dollar in a moment in terms of the technicals, but we had the geopolitical tensions, right? With obviously Israel in Lebanon, and obviously that's triggered Iran with certain assassinations, and obviously Iran retaliated, and it's just the tensions are extremely, extremely high. Guys, you see all this information that I'm putting into this video, it just comes like that, right? It's second nature to me. And the reason being is because obviously I have that experience. Nothing beats experience in these markets. Everything that I have learned, I've been able to simplify, because a lot of information that's out there in the public domain is extremely overcomplicated and a lot of jargon. And it doesn't make it easy for the everyday person, everyday trader trying to learn macros, understand, why is the price just spiked here because of this fundamental reason? I don't understand it, because all this information's over, complicated. But for me, all these years, I've been able to simplify it, make it easy and digestible and actionable for the everyday trader. And that's exactly what I've been able to do. And I've put together in my fundamental bootcamp course, which you can obviously check out if you're willing and keen to really level up your whole game. You can thank me later on that. Anyway, let's continue with the video. So remember, you don't forget, people have just been clouded about, let me sell dollar because the FOMC are going to be cutting rates. The FOMC have cut by 50 basis points. They're going to be cutting again by another 50 basis points. Calm down. So don't forget, the dollar is a safe haven. In times of geopolitical tension, you should put your money in the largest economy in the world, the reserve currency of the world. 1. 2, Jerome Powell earlier in the week as well told the markets to calm down. Remember I said that. 3, labor market data was solid. So it's an accumulation of things. Look at Friday, right? We had a decent week, decent day, but it wasn't just NFP. It wasn't just NFP. Relax. The dollar started staging a rebound at the open after the geopolitical tensions were extremely high with Iran and Israel, and obviously they are still high. So that supported safe haven flows. Now, structurally for the dollar, before we talk about other fundamentals, which I'm going to get onto in a moment, structurally for the dollar, you see how we're printing lower highs, lower lows, lower highs, lower lows. We're respecting this trend to the downside. Remember those 3 key pillars that were supporting the greenback south, all right? And those have now we've bounced. We've bounced because markets have now shifted their rate cut pricing. Rate cut pricing has completely freaking shifted. Okay, because all of this downside, remember, was softening economic data, was inflation coming down, was a dovish FOMC. Now that momentum has been halted because of Friday. Look now, rate cut pricing, markets forecasting just 25 basis points. This is wrong, because around a week ago, this was 60-something% probability that they're going to cut by 50 basis points until Jerome Powell told the markets to calm the fuck down. Then, as I said to you guys, right, in a previous video, all it took, right, was to have a decent for the foundation to be laid come Tuesday with the job openings. Look at that. Decent amount of jobs being added to the opened, excuse me, in the economy. Previous revised higher. ADP privately conducted, 143,000 jobs being added to the economy. And then look at this. Look at it. Wages going up 0.4%. Previous revised high 0.5. Decent jobs being added, 254,000 jobs being added to the economy. Do you want me to talk a little bit more faster? Previous revised higher. Unemployment rate 4.1% coming down. What does that all mean? You know what it means, guys. You know by now what it means. Stop making me tell you, you know. It's inflationary. If we've got a solid labor market, if wages, people getting paid more mullah, what are they going to go and do that mullah? They're going to go out and spend that mullah. And then obviously that's inflationary. Decent amount of people in the employment, right? To go out and be spending money. It's inflationary. Unemployment, less people unemployed. There's more people stimulating the fucking economy. Inflationary. So that has completely removed any freaking possibility of a 50 basis point rate cut, which seriously, the markets did not want that heat. I told you in that previous video, that would have been heat, right? Which you've spoken about. Do you really want the economy faltering like that, boys and ladies? Now, on to this week. This is very, very important. Actually, before we go into the weekly, this weekly, I just want to tell you, look at that monthly candlestick right now. You know, you could almost view that as a potential morning star validated so far with this big bullish engulfing candlestick in August. And we really, really have laid the foundations for a recovery, you know, at least you can see the potential run that the Dixie could have once if we reclaim 103, which looks potentially likely, and then we could work our way to the upside. Now, we don't give a shit about, I don't personally give a shit about the FOMC meeting minutes this week. We know what the crack is with there. Yeah. All focused, obviously, on just what we just saw there with the labor market data. Solid, inflationary. Okay, these meeting minutes are going to be out of date now. Now we've got the core, the inflation. Okay, we want to see how CPI is. Are we falling as fast as what the markets want? I don't think you see how that labor market data there on Friday was very inflationary. That's obviously not going to filter through yet. I think we'll see that filtering through the next reading in terms of its input towards to the economy and inflation. But here, I kind of see even the CPI data is a bit dated. Inflation is going to start to tick higher, by the way, because we've seen oil prices as well pushed to the north. So energy prices going to go up. Gasoline prices going to go up because of what's happened, the geopolitical tensions right now, fears of supply constraints given the fighting at the moment in the Middle East. But, you know, inflation is expected to call in these latest readings. If they don't call as fast what the markets are expecting, then obviously the dollar bulls are going to further push to the upside. If they do call in line with expectations, I still think the dollar's going to push higher. If it calls slightly below expectations, I think we could see some dollar weakness, but it's not going to be sustained because markets will think this is a little bit out of date. We've just seen a decent run of labor market data. We're now seeing oil prices rise. Inflation could start picking up a little bit in the next coming reading. So I kind of see this batch of data as being a little bit dated, in my opinion. So I'm still very much in favor of seeing the dollar bulls this week, especially to see how further on the geopolitical tensions escalate. All right. But we really, really have laid the foundations here. And when you look at euro, we did capitalize on this, obviously, with some nice shorts last week, didn't we? Okay. When you look at euro, we ran into heavy supply here at 112. You see a neckline there, potential top. They're at 110 taken out, opening the door for some further downside. And I said this before, when you look at Eurozone fundamentals, we're really, really cooling. You know, inflation's coming down in the Eurozone. Data's been shit, really. When you look at the recent run of data, like look at the key PMIs, they're atrocious. German IFO data, bad. You know, unemployment rates ticking higher as well in the Eurozone. So, you know, data's not great, and it does warrant dollar to finally just start coming out on top and seeing it capitalize versus euro and obviously versus certain peers. All right. That's sort of my view there, my spiel on the dollar. Obviously, you know, with the dollar related, you'll see some trades being picked up at the open, as we usually do. And we'll provide a little bit more analysis on the dollar pairs now. As always, guys, if you found value in this video, make sure you smash up the like button and the subscribe button. Drop a comment. If you want to take your knowledge to greater heights, you can check out the TFTC membership if you wish, or check out my fundamental bootcamp course, which has hours of practical and theory, tying in those key macros that you must know when you're trading in these financial markets. You cannot ignore those babies, and getting them to tie in beautifully or with how things resonate on the charts on a technical level. Other than that, stay lit, stay blessed. Let's get it.